Hey everyone, welcome back. Ready for another deep dive. Today we're tackling something pretty complex and honestly a little intimidating, China's investment landscape. You know, the one with all the headlines about Xi Jinping and property market and all that. But don't worry, we've got you covered. We've waded through tons of sources, YouTube videos, articles, financial reports, you name it. We're talking about everything from that Hamish Hodder video to the Markets Insider piece on Howard Marks to the Milken Institute panel discussion. Oh, and that Standard Chartered article that really gets into the weeds of China's economic transition.
Yeah, it's a lot to process, right? I mean, you keep hearing this term uninvestable thrown around.
Right, like in that Hodder video.
Exactly. And that Markets Insider article about Howard Marks.
Yeah.
But I think it's important to understand where that sentiment is coming from.
Okay, so let's unpack that. I mean, Xi Jinping getting that third term, that's a pretty big deal, right?
Huge. And all the talk about China maybe shifting away from those capitalist reforms.
Like in Hodder's video, where she talks about more equal income distribution, but not egalitarianism.
Yeah, that was an interesting quote. It definitely raised some eyebrows. I think those political developments are definitely playing a role in this whole uninvestable narrative.
So investors are basically spooked.
Well, I think there's a concern that we might see a move away from those free market policies that really fueled China's economic boom.
So more state control, less free market.
That's the worry. Some investors are afraid that increased state influence could stifle innovation and, ultimately hurt growth.
But wait a minute, didn't we also see that Howard Marks, that billionaire investor, is actually buying up Chinese assets right now?
He is.
So is he just like totally ignoring all this?
Well, Marx has always been known as a contrarian investor.
Yeah.
He's the guy who says buy when there's blood in the streets.
Right. Like he's seeing opportunity where everyone else is seeing disaster.
Yeah, I think that's a good way to put it. He's basically arguing that this fear, this whole perception of China being uninvestable, has actually created this unique buying opportunity. He's betting that the market is undervaluing Chinese assets.
So he's saying China's fundamentals are still strong.
Exactly. He's looking past the headlines and focusing on those underlying economic drivers. And he's particularly bullish on sectors like healthcare and technology. He sees huge growth potential there.
So is that maybe tied to this whole economic transition thing that everyone's talking about, like in that Standard Chartered article?
Oh, absolutely. And it came up a lot in that Milken Institute panel, too. China is trying to shift away from that model that was so reliant on investment and exports and move towards something that's more focused on domestic consumption.
So less made in China, more bought in China.
Exactly. They want to create an economy that's driven by domestic demand and higher value industries.
So is Marx basically betting on this transition being successful?
I think that's part of it.
Yeah.
He sees this transition as a chance to get in early on the next phase of China's growth story.
So while some investors are running for the hills, Marx is like, hey, this is where the real action is.
Pretty much. But it's important to remember that China's not a monolithic entity. I mean, different sectors are going to be impacted differently by this transition, and there will definitely be winners and losers along the way.
Okay, but what about this whole property market crash everyone's talking about? I mean, Milken Institute panel threw out some pretty scary numbers about trillions of dollars in household wealth being wiped out.
Yeah, no, it's a serious situation. That property downturn has had a real impact on household wealth.
And that obviously has implications for consumer spending and, the overall economy.
Right. But it's interesting to see how the Chinese government is approaching this whole thing.
What do you mean?
Well, they're not exactly rushing in with massive stimulus packages to prop up the market.
Really? That seems kind of counterintuitive, doesn't it?
It might seem that way.
Yeah.
But remember what they were saying at that Milken Institute panel about developers making too much profit in a non-productive industry?
Oh, yeah, I remember that.
The government is basically taking a more deliberate approach. They're trying to deflate that property bubble in a controlled way.
So they're not just trying to paper over the cracks.
Exactly. They want to address the underlying issues and restructure the economy in a way that's more sustainable in the long run.
So they're trying to steer that capital towards other sectors.
Exactly. Like tech and innovation. They see those as the real drivers of future growth.
Okay, so it's not just a simple story of boom and bust. There's a lot more going on beneath the surface.
Absolutely. It's a complex situation with a lot of moving parts.
But are there any signs of recovery in the property market, or is it just all doom and gloom?
Well, it's not all bad news. They did mention in that Milken Institute panel that Tier 1 cities like Shanghai and Beijing are showing some signs of stabilization.
So the bigger cities are doing better.
Yeah, demand for luxury properties in those cities is still pretty strong, and prices have started to level off.
So maybe it's not a nationwide collapse, more like different regions are experiencing the downturn in different ways.
Exactly. The property market is highly regionalized. While Tier 1 cities might be bouncing back, lower-tier cities are still struggling.
Okay, so it's a really mixed bag. It sounds like anyone looking to invest in Chinese property needs to do their homework and really understand those regional nuances.
Definitely. It's not a one-size-fits-all situation.
But all this talk about economic transition and property market woes, it kind of makes China sound like this slow-moving giant. It doesn't exactly scream dynamic, does it?
That's a common misconception,
Mhm.
and one we need to address head-on because the reality is far more complex.
Yeah, I mean, while the property market's figuring things out, other sectors in China are showing some serious dynamism and innovation.
Yeah, that's a good point. I was just reading that CBS transcript about Chinese car companies really making a splash globally.
Right.
Some are even setting up shop in Europe, going head-to-head with the big names. We're not talking about those old-school state-run companies here. These are like lean, mean machines.
Yeah, they're agile, they're ambitious. They've really had to learn how to compete in a tough market.
That Milken Institute panel had that great anecdote about BYD, that EV company,
Yeah. They were talking about how BYD actually started building their own robots and software.
because they couldn't find suppliers who could keep up with them.
Exactly. I mean, that just shows you how fast these companies are moving. They're not just following the trends, they're setting them.
They're not afraid to get their hands dirty and really innovate to get ahead.
So it's like this interesting contrast, right? You've got the property market kind of trying to find its footing, and then these other sectors like tech and manufacturing are just booming.
Exactly. It's almost like two different speeds of progress happening at the same time.
Okay, so let's zoom in a bit. For our listener who's trying to make sense of all this, where should they be paying attention? Which sectors are really hot right now?
Well, we've already touched on EVs.
Right.
I mean, China is already the biggest EV market in the world,
Yeah.
and they're investing heavily in both production and infrastructure.
Like they're really all in on EVs.
Yeah, absolutely. And companies like BYD, NIO, XPeng, they're all making big strides in things like battery technology, charging infrastructure,
Yeah.
even self-driving features,
Like they're living in the future of transportation while we're all still stuck in traffic.
something like that.
Yeah.
But it's not just EVs. China's also really pushing ahead in renewable energy more broadly.
Hmm.
Solar, wind, hydroelectric.
Right.
It's all part of their big plan to become carbon neutral. And it's creating a lot of opportunities for investors in clean energy technologies.
So it's not just about economic growth, it's about sustainability too.
Exactly. They're trying to build a greener economy while also becoming a technological powerhouse.
Speaking of tech powerhouses, we can't forget about AI.
Oh yeah, AI is huge in China. I mean, Li Lu talks about it a lot in that interview with Zhang Island.
He calls it a universal and all-round expansion of intelligence. That's pretty mind-blowing.
Right. He compares it to, how humans evolved from gorillas.
So he's basically saying AI is the next big leap in evolution.
I think that's what he's getting at.
Yeah.
He sees it as a game changer. Something that could revolutionize entire industries and solve some of the world's biggest problems.
But he also talks about the risks, right? Like
Yeah.
AI getting out of control.
Yeah, he definitely emphasizes the need for responsible development, making sure AI remains under human control.
Like it's this incredibly powerful tool, but you got to be careful how you use it.
Exactly. It's like opening Pandora's box.
Yeah.
You have all this potential,
Yeah.
but also the risk of unintended consequences.
So is China striking that balance between, pushing the boundaries of AI while also keeping things under control?
Well, they're certainly investing heavily in AI research and development, but they're also putting safeguards in place.
Yeah.
Trying to anticipate and mitigate those potential risks.
So it's not just a Wild West out there.
No, not at all. They're approaching AI development very strategically.
Okay, so we've got these exciting sectors, EVs, renewable energy, AI. But for our listener who's thinking, okay, how do I actually invest in all this in China? Where do they start?
Well, that's where things can get a little tricky. Remember all that talk about the regulatory landscape in China being complex and constantly evolving?
Yeah, that didn't sound too easy.
It's not. There are restrictions on foreign ownership in certain sectors, and figuring out how to navigate those restrictions can be a real challenge.
So it's not as simple as just buying shares on the stock market.
Unfortunately not. You really need to understand the legal structures and do your due diligence.
And that VIE structure we talked about earlier that comes into play here, right?
Exactly. VIE stands for Variable Interest Entity. It's basically a legal workaround that allows foreign investors to get exposure to companies in sectors where they're not allowed to directly own the assets.
So it's like a backdoor into those restricted sectors.
Yeah, you could think of it that way.
But it sounds kind of risky. Like if you don't really know what you're doing.
Yeah, that's why it's so important to do your homework. You need to understand the risk involved and make sure you're comfortable with the level of complexity.
So beyond that VIE structure, are there other challenges investors need to be aware of when they're looking at China?
Oh yeah, definitely. Transparency is a big one. Chinese companies don't always follow the same accounting and disclosure standards as you might find in, the US or Europe.
So it's harder to get a clear picture of how they're really performing.
Exactly. You need to be aware of those differences and adjust your due diligence process accordingly.
So it's not just about understanding the business itself, it's about understanding the whole environment they operate in.
Right. And then, of course, there's the political landscape.
Hmm.
We've already talked about how China's a one-party state,
Yeah.
and the government has a lot of influence on the economy.
So political risk is something investors can't ignore.
Absolutely. Any major policy changes or shifts in government priorities could have a big impact on the markets.
So you got to keep your ear to the ground.
Exactly. Staying informed about the political landscape and understanding those potential risks is crucial.
It sounds like investing in China is not for the faint of heart.
It definitely requires a certain level of caution and awareness.
Oh, and what about currency risk? I mean, the Chinese yuan isn't exactly freely convertible, right?
Right. And its value can fluctuate against other currencies.
So your returns could be wiped out by those currency swings.
It's definitely something to consider. Investors need to factor in currency fluctuations when they're making investment decisions.
So it's not just about picking the right companies, it's about navigating this whole web of challenges.
Yeah, it's multifaceted.
Yeah.
It requires a deep understanding of the market, the regulatory landscape, the political environment, even the currency.
It's like a high-stakes game of chess.
You could say that.
So we've covered a lot of ground here. The overall economic picture, specific sectors, the challenges and opportunities for investors. What's the big takeaway here?
Well, I think the main thing is that China is complex, it's dynamic, it's constantly evolving. It's not a market you can easily put in a box.
It's full of contradictions.
Exactly. It's a blend of socialism and capitalism, of tradition and modernity, of central planning and entrepreneurial spirit.
It's like this unique hybrid economy that's constantly defying expectations.
And that's what makes it both fascinating and challenging for investors.
So for our listener who's been on this deep dive with us, what's the one thing you want them to remember?
I think the main takeaway is that you can't ignore China.
Right. It's a major player on the global stage.
Absolutely. It's the world's second largest economy, and it's home to some of the most dynamic and innovative companies out there.
So whether you're a seasoned investor or just starting out, it's worth getting a handle on China.
Yeah, definitely.
Yeah.
Take the time to understand its complexities and explore the potential opportunities.
But it's not a market for the faint of heart, right? It takes a certain level of sophistication.
That's true. Investing in China definitely has its risks.
Like we've talked about.
Yeah.
Yeah.
But as with any investment, it all comes down to doing your homework, understanding the potential downsides, and making informed decisions.
Decisions that align with your overall investment strategy,
Exactly. It's about being strategic and discerning.
not just jumping in head first.
Right.
And speaking of long-term trends, we talked about the transformative potential of AI and how Li Lu sees it as this force that could reshape human civilization.
Pretty profound stuff.
It really makes you think about the future of China and the world.
It does. Like, how will the development of AI in China impact the global landscape? Will it create new investment opportunities, or will it lead to all sorts of unforeseen challenges?
Those are big questions.
Yeah, and they're not easy to answer.
But they're definitely worth thinking about.
Absolutely. The future is full of possibilities.
And China's going to be right at the center of it all.
No doubt.
Well, we've covered a lot of ground in this deep dive.
We have.
We've explored the complexities, the challenges, and the opportunities that make China such a compelling investment landscape,
We've talked about how China's economy is shifting.
moving away from exports and towards domestic consumption.
We've delved into specific sectors like EVs, renewable energy, AI,
Sectors where China's really leading the way,
and we've talked about the unique challenges investors face in China.
like those regulatory hurdles and transparency issues,
But I think we've shown that China is a market full of potential.
for those who are willing to put in the work.
Yeah. Do your research,
Yeah.
embrace the uncertainty, and take a long-term perspective.
The rewards could be huge.
Absolutely.
So as we wrap up this deep dive, what's the one thing you want our listeners to take away from this conversation?
I'd say remember that China's not a monolith. It's a huge and diverse country with a complex and dynamic economy. To really understand China, you have to go deeper than the headlines.
Look beyond the surface.
Yeah, you got to delve into the nuances,
The individual companies.
the specific sectors.
The underlying trends that are shaping the future.
Exactly. It's about seeing the forest and the trees.
Understanding the big picture, but also paying attention to the details.
And it's about staying curious,
Asking questions.
always learning.
The more you know about China, the better equipped you'll be to navigate its opportunities and its challenges.
Couldn't have said it better myself.
Well, thanks for joining us on this deep dive into China's investment landscape. We hope you found it insightful and thought-provoking.
Yeah, and we encourage you to keep exploring this fascinating and ever-evolving market.
Until next time, keep diving.